A fever broke overnight, leaving the market with a persistent cough that hasn't cleared yet. The splits between hardware and software tell us this isn't a full cardiac event, just elevated vitals from something more manageable. We need to check whether tomorrow's pulse shows recovery or complications. Capital is rotating into infrastructure certainty while avoiding near-term earnings fog. SMH surged 1.19% as chipmakers gained, but MAGs dragged down 1.45%. The classic hardware suffer at Divergence when investors hedge against rate uncertainty by buying tangible assets rather than abstract SaaS multiples. The engine is running hotter than yesterday's readings suggest calm. IWM shed 0.28%, while KRE dropped 0.62%, indicating small cap and regional bank exposure remains sensitive to any shift in Fed expectations. The 10Y Treasury climbed 0.6% to 4.72%. Confirming rate hike pricing has ticked higher despite headlines about complicated next moves. Fear products are responding with muted aggression. UVXY, VIXY, and VXX all gained between 0.6–0.8%, but nowhere near the explosive spikes we see during genuine stress events. This tells us anxiety is present but contained. Investors are hedging without panicking. The VIX at 1519 with a 6% daily gain sits in that uncomfortable zone where fear has been felt for days but hasn't yet become paralyzing. Commodities and gold both climbed, while consumer staples XLP fell 1.75%. Oil jumped 3.09% on geopolitical whispers, the kind of background noise that keeps institutional desks alert without triggering mass positioning shifts. This pattern mirrors what we've seen in previous inflation scares. Tangible assets attract capital first. Real economy pain follows later if anything breaks. Safety havens are split between defensive and speculative positions. GLD gained 0.91% as investors deployed into actual gold, but TLT fell 0.84%. Long-term bonds aren't seen as shelter anymore when yield curves flatten. XLP's 1.75% decline suggests consumer staples protection is priced in. The real flight to quality hasn't fully materialized yet because market participants are waiting for clearer directional signals from policymakers. The portfolio hero is currently defending against a rate hike villain that has lost its teeth but retained enough momentum to keep heart rates elevated. The hardware-software split reveals investors are prioritizing tangible infrastructure over near-term earnings. Exactly what we want when uncertainty dominates headlines. Tomorrow's reading will show whether this fever breaks or turns into a persistent cough requiring longer treatment. The Canary dashboard shows market vitals stabilizing after an overnight spike, but the 6.6% VIX gain and commodity strength warn that recovery requires careful monitoring rather than complacency. Watch for hardware outperformance to confirm infrastructure rotation is genuine before adding fresh exposure near this elevated support level. The fever may break within a week. The cough could linger longer, depending on how Fed policy evolves next month.